Hey there, everybody. How are we doing today? I hope that you guys are doing good. It is Tuesday morning. My name is Jason Krutzky, and I'm live here with you guys this morning to hang out and talk about TrendSpider, talk about the markets. I don't have any real agenda today. Today is pre-market pulse, and we do these a couple times a day, or a couple times a week, rather. And it's really just my time, or rather, really more your time, to hang out with me and pick my brain. If you have questions about the TrendSpider platform, I'm here to answer those for you. If you need help building a scanner, you need help understanding how to use one of the tools, I am here to do that for you. We just recently wrapped up our St. Patrick's Day sale. Hopefully, there are some new users who took advantage of that sale tuning in this morning. And hopefully you guys have questions for me. I would love to assist y'all with anything that you need. So if you got something, hit me up, let me know. I am just hanging out. Oh, there's an echo? Oh, no. I was actually having issues. Let's try this. Tell me if this helps. Does that help? Did that help? I noticed that I was having an audio issue like 1 second before I went live. So that might explain part of why I was having issues. All right, we're doing better. Miss Michelle, how are you today? Sylvia, how are you today? Sylvia Coletta. I used to have a good friend with the last name Coletta way back in the day, years and years ago. How are you guys today? Thank you so much for tuning in. Where's everybody tuning in from? I always like to know. You guys are two new names. Never seen either of you here, so welcome. Thank you for being here. What brings you here this morning? Why are you here? How can I assist you? New Jersey? Miss Michelle from New Jersey? Yeah, I'm doing pretty good this morning. It's a little early for me. I'm in mountain time, so it's a little early, but I'm doing good. Okay, cool. Sylvia, you're new. Awesome. Well, welcome to the platform. Thank you for getting an account with us. I take it maybe you got an account during the St. Patty's Day sale? Ooh, from Rome. I've been to Rome. Rome's beautiful. Lovely, lovely city. The city of Rome. Really enjoyed it, our time there. Do you guys have any things that you are looking to kind of learn today? Any specific reason why you're tuned in? I was just kind of making my rounds, going through some of the big names in the NASDAQ 100 here. Obviously, NASDAQ 100 is kind of outperforming everything. So I was just popping through this morning before I got on with you guys. I was popping through the charts and kind of seeing where things are at, how things are looking from some of those top names. But yeah, I'm really here for y'all. So if anybody has any questions about the platform, trying to understand this or that or the other thing, I'm more than happy to answer those questions for you. Anything you're interested in learning about today. That is my role here today. Are you a day trader? What's my favorite setup? I do day trade, yes. My favorite setup is a price action setup. It's essentially like a head and shoulders. The NVDA actually is kind of coming right into what I would consider a favorite setup, and I can kind of explain it to you. Everybody knows Head and Shoulders. What's up, Roman? Thanks for being here. That's a name I recognize. Hope you're well. One thing that I'm always looking for as a price action trader and a trend trader, I'm always looking at what's going on with the trend. Are we making higher highs? Are we making higher lows? Or are we making the reverse of that? Lower highs, lower lows. So one thing that I like to use, especially when I was kind of learning things, I was using an indicator called zigzag. And zigzag is kind of an interesting indicator because what it does is it removes a lot of the noise. I'm going to actually turn off this moving average just so that we're not paying attention to anything else. It removes all of the noise and it paints us very, very basic highs and lows. So you can very quickly look at a chart and see what the trend is. Now, of course, in a lot of cases, it's not hard to tell. Right? If a stock is in an uptrend, it's usually pretty easy to tell. If stock is in a downtrend, it's usually pretty easy to tell. But sometimes, you have highs and lows that are kind of within range of one another. Anyway, so this is kind of what I'm looking for in a lot of cases. And I'll say this as well. I look for this on all time frames too. Like I'm using the daily on NVIDIA here. But what I'm looking for is just areas or places where price has not come back to test specific pivot levels. So whenever we lose, so I'm looking at relative highs, I'm looking at relative lows, and then I'm looking at the pivots that took us to those. So the relative high, you could say the relative high that we're coming into is somewhere around in here, right? This is like prices is trying to find its way back up here to test up here essentially. But what is it that brought us up here? Well, you would say that this low right here is what brought us up here, right? And so we look at this low and we say, okay, well, this low was lost because price traded well below it for a good period of time, for months, price traded below this. So then what I look for is this, and essentially it's the shoulder, right? If you would call this high, if you call this the head, you would call this the shoulder. This is the left side that brought us up and we lost it. So coming back into it is where I'm looking for price to start maybe finding some resistance, maybe catching some sellers. So kind of looking in this relative area for potential opportunities to take a short. Whether or not they'll come, it's hard to say. You never know. But I look for this really on all time frames, and I look for this in the opposite direction as well. So essentially for long opportunities, I'll look for the same exact thing. You can see this on a much smaller scale over here. Now the zigzag doesn't show this. It doesn't draw this spot because that's just how it works for this particular time frame. But essentially what you have is you have a high you have this low right here that took you up to the high, and then you lost it in here. You traded below it, right, in here. And then when they came back up and they tested they tested somewhere in here, right? So it's the same idea on a smaller scale. So that's kind of I guess that's my favorite kind of setup. That's not necessarily, there's not indicators in that. I'm not using any moving averages or anything for this. But when it comes just to basic setups, this is one of my absolute favorites, is to check that out. On the Qs, another one of my recent favorite setups. Let me see if I can find something that looks like what I was looking at yesterday. I really like watching broadening ranges. So you can use, let me see here. You can use these fractal trend lines. Sometimes it's going to draw them and sometimes it's not, depending on the time frame that you're looking at. But these fractal trend lines are a good way of automatically identifying broadening ranges. Is a pretty decent one. Actually, I guess that's not really a decent one. Have to do a little hunting. But broadening ranges, there you go. This is a good broadening range. Broadening ranges are simply what they look like. They're ranges that broaden, so you make a high, you make a low, and then you go and you take out the high in reverse, and you go and you take out the low in reverse. So I'm kind of always looking for these on smaller time frames as well. For day trades, for opportunities to take longs and shorts, You want to see how price reacts into those upper and lower fractal trend lines. Another thing that's cool about the fractal trend lines indicators, you can actually scan for this. So you can go in a scanner, and if you type in broadening, you can look for long-term broadening range, short-term broadening range, short-term broadening range near highs, short-term broadening range near lows, and so on. So let's just say short-term near highs. And it's all preset for you. This automatically finds price within a 2% range of the upper fractal trend line on a daily time frame. I'm just going to run the scan real quick and see what it yields. See if there's anything that's meeting this criteria right now. That's not really what we're looking for. I need to make sure that my fractal trend lines are the same settings here. Okay, they're not. So one thing to always be sure of whenever you utilize a shared scan, so that's going to be a scanner that's living in your market scanner list over here on the left-hand side. All of our users, you have access to a ton of different shared scans that look for all kinds of different setups. One thing to make sure of is that sometimes those scans utilize conditions for the indicator that are different than the standard conditions of the indicator in the platform. So for example, I just added just a basic fractal trend line, and we can note here that the length on them is a 21 period. Well, in the indicator, in the scan, the length is 13. So you're going to want to make sure that those meet up, that they match, because otherwise you won't see the thing that the scanner is finding. So this is what it's finding. It's finding this broadening range, price coming into this upper end of the broadening range, suggesting that there might be a little bit of resistance up there. Miss Michelle, you love gap fills. Okay, cool. Do you know how to find them on the platform? Because you can. There's a bunch of different things that you can do with gaps. Looking for gap ups, gap downs, and so on. And there's also, if you're not familiar, the easiest way that I have found personally, the easiest way that I've found to utilize gaps on the platform, there's a couple of different gaps or gap indicators. There's the gap snake. This is kind of the classic. The first gap indicator that was on the platform. Let me turn off the scanner here. And what you can kind of see here, it's kind of hard to tell. Let me brighten these up for you guys. I might go to a different name too. So here's all your gaps. Gap Snake is going to automatically paint all of the gaps for you on the chart. Obviously, there are some gaps that are filled, right? And really, they've all been filled at this point. Everything that we're seeing on the chart right now has been filled at this point. There's also one called the Gap Detector. And what this one does, it paints it out into the future. It paints each gap out into the future until it's filled. So let me see if I can find something that is a smaller time frame. Yeah, here we go. So this is a good example of, here's some gaps above, 321, 327. We can go back in time and see them. Here they are. So these are just unfilled gaps, right? We filled this guy, so it's all filled. And so what I would do here is on any names that you're interested in trading gaps on, maybe that gap is out in the future and you're just waiting for it to fill at some point and you don't want to keep your eye on it, but you want the platform to keep your eye on it. What I'm always going to do in that particular instance is I'm just going to take my horizontal line drawing tool, this guy right here. I'll click on it and I'll set it at the gap. And then I'll right click and say create alert. So this is what we call a dynamic alert. And you can do a lot with dynamic alerts. Have you utilized, Michelle, have you utilized dynamic alerts yet? Are you familiar with them? Because if you haven't, I could totally take a few minutes and go through how they work. They're definitely worth learning. if you haven't played around with them yet. Michelle, have you played around with these alerts yet? I definitely want to walk you through them. I want you to understand how to use them if you have not used them yet. Okay, great. So when you create an alert, you're going to get this create trend alert box that pops up. And you can define alerts a lot of different ways. You can define what we call the trigger of the alert. This is the instance that is occurring in order for the alert to go off. You can be very specific about that instance. You can choose a breakthrough trigger, a touch trigger, a bounce trigger. And these all have different definitions, and I strongly recommend understanding the difference between each of these definitions. Breakthrough triggers when price opens and closes, or closes and opens on different sides of the buffer area. That's important to understand. It's opening and closing, or closing and opening on different sides of the buffer area. That's considered a breakthrough. A touch occurs when price touches or trades through the buffer area, but does not actually break through it, meaning it doesn't actually close on the opposite side of it. A bounce triggers when the price touches the buffer area, but does not break through on the next candle. These are all unique instances, and one may keep you in a trade, whereas one may keep you out of a trade, or one may get you out of a trade. So that's why it's important to understand the difference here. Generally speaking, when I'm trying to get alerted on price coming into a particular area, I'm going to keep both of those off. I just want to know that it's touched it, so I have this touch alert. If you're, let's talk through a process or a scenario in which you might want to break through. For example, if you're trading a longer time frame and you specifically, let's say you need the daily to close above a particular level. Well, in order for that to be the case, you got to use a breakthrough, because it's specifically defining that price has opened on one side and closed on the other side, right? And a bounce is a 2-candle scenario. You've touched an area, but then the next candle doesn't close. The next candle doesn't break through, right? So you can choose all three, you could choose just two, you could choose just one. It's really up to you. In this particular instance, I just want to get alerted when price gets there, so I'm going to use the touch. The next option here is sensitivity, and sensitivity is a dollar amount that you can define, and it's the area around the line that the alert will go off within. So you can see as I slide the slider bar to the right, that area around the line, that shaded area around the line, gets bigger, meaning if price gets within this dollar amount of my level, I'm going to get an alert to let me know, right? So maybe for a gap fill, I want to keep this turned off because I specifically want to know when price actually gets to the gap, right? With a bounce, you may want to have some sensitivity there, and depending, you may want to have some sensitivity on the touch as well. It's really up to you. Sometimes price front runs a gap and then trades in the opposite direction. It just depends. It's really up to you. But that sensitivity slider bar just allows you to further refine the alert that you're looking to receive. Generally speaking, I will have at least a little bit of sensitivity on, because I just know how markets can be. I know that oftentimes if you have a very specific level that you're looking for and that you know that a lot of traders might be watching, oftentimes those levels get front run just a little bit, even if it's just by pennies, they get front run. So that's good enough reason for me to have a little bit of sensitivity there, so that I make sure that I get the alert regardless of whether price actually gets to the very specific price point that I want, or it gets very close. Next, you have the confirmation candle. This is the time frame that you receive the alert on. This is very important. This is going to be preset to the time frame that you have on your chart. So in this particular case, I'm on the 65-minute, so my alert is preset to the 65-minute. If price touches this line at any point, I'm going to get the alert at the close of the 65-minute candle. Well, that doesn't really jive for me. That's not fast enough. Let's switch that confirmation candle down to a much lower time frame. I've got the 5-minute here. So that means when the 5-minute candle, any 5-minute candle that touches this area, I'm going to get an alert to let me know. We could choose to utilize extended hours data if we want. I tend not to, just because extended hours data is just not that important to me. I prefer just trading off of regular market hours data. We want to give this a name, right? So we'll say like QQQ gap fill. We can leave a note on it if we want, maybe try a short. And then your expiration, depending on the plan that you are signed up for, you're going to have different options here. You're going to have different amounts of time that a alert can stay active for. On the most expensive plan, the alerts are active for 100 days. On the cheapest plan, I believe it's 14 days. I'm not sure exactly, but let's just say we want this to be active for the next 30. And then we have our triggers. The trigger is going to sound when price touches this area. Now, it is possible that price could get there and then kind of consolidate up there, right? And kind of slowly bounce along the line before maybe making a move lower or before maybe continuing higher. If we want to be alerted each time the conditions are true, we need to choose multiple triggers. Now, for something like this, it doesn't necessarily make a ton of sense to have a ton of triggers. Maybe you want to have two. Price gets up there, it bounces or it touches, it pulls back, and then it goes and tests it again. And maybe you want to be alerted on that second test as well. You could have multiple triggers, and that means you get the alert the first touch, it pulls back, it goes back and touches again, you get the second alert. What these multiple triggers work really well for is if you're trading something like a moving average cross or an RSI getting overbought or oversold or something like that. And we could talk through how to utilize the multi-factor alerts for those sorts of conditions. But, you know, if you're just looking for something like this, a gap fill, that's probably going to happen relatively quickly. You may not need multiple triggers, but if you're trading something like a moving average cross on a short-term time frame, and you know that those moving averages cross quite often, maybe a couple times a day or something like that, and you want to be alerted every single time that happens, you could choose multiple triggers up to 20. In this case, we'll just choose the 2. And we'll say create alert. And so now there is an alert here on this line. The platform is now watching this gap fill on the cues. I don't have to think about it. I can move on from my day, and I'm going to get an alert sent to me. If we go to our sidebar and say add or remove widgets and go add new and choose alerts, we will now see that alert over here in our alerts widget. So any alerts that you have active, you're going to see them here. They're going to be labeled with a little green icon that lets us know that they're active. There are inactive alerts as well. Any alert that expires is going to become inactive and can then be refreshed. When you hover over an alert, you're going to see these 4 icons here. This is specifically for multi-factor alerts, and we can talk multi-factor alerts if you're interested in learning about multi-factor alerts, because that's how you're going to get alerted on things like moving average crosses or multi-conditions. And this is a multi-factor alert. So multi-factor alerts can be refreshed. They can be started back up once they expire, and you do that simply by clicking the refresh icon. And it brings them back up. We could see what this one is. I'm not sure what this is. Trail stop something or another. Something kind of random. So that's how dynamic alerts work. I'll talk real quickly about multi-factor because I think it's worth spending the time on, especially if you're new and if you're trading conditions that do occur quite often and you want to be alerted every time they occur. It's worth learning how to do. So in order to get to your multi-factor alerts, you come up here to your alerts and bots button. click on the three dots and go to create multi-factor alert. And so this alert is a lot different looking than your last alert, than your dynamic alert. In this alert, you have to create a script. You have to create these conditions that you're looking for. So let's just pick something really basic, something like a moving average cross. I'll talk you through how to script it out. So in order to script out anything in the platform, this is going to be true across all of the tools on the platform where scripting is required to utilize the tool. So scanning, you're going to use scripts. In your strategy tester, you're going to use scripts. And in your multi-factor alerts, you're going to use scripts. So it's important to understand how they work. Also, once you create a script, you can pull that script, you can save it, and you can use it everywhere else. And I'll show you guys how that works as well. So first thing you want to do, you want to go to add parameter here, and you'll see three options. We are only interested, for now, we're only interested in this condition option. We can talk through what a condition group is. We can talk through loading from a template. But for now, we're just trying to script a moving average cross. So we're going to use the condition option. You're going to see three things to choose from here. We're talking about moving averages. Those are indicators. So we're going to want to select the indicator option. Next, we want to select the time frame. Let's say you're trading the 821 EMA cross on a 15-minute time frame. So you select 15-minute. You'll type in exponential here, and we're just going to select an EMA. The next thing that we have to do, we have to define what this exponential moving average is doing. Is it equal to something, greater than something, less than something? Is it within range of something? Has it increased, decreased? Has it crossed up, crossed down? Has price touched it, bounced off it, broke through it? Lots of different things here, but we're going to say crossed up. And what's it crossing up on? It's crossing up on another indicator, another EMA. We're looking for an EMA cross. So we'll say indicator, we'll say 15-minute, we'll type in exponential and select it. Now we need to define next the lengths that we want to choose here. So I'm going to click on this. It's going to bring up the edit box for that particular moving average. I'm going to change this to 8. And I'm just picking arbitrary EMAs. We'll click this one. We'll change this to 21. So now we're going to be alerted on the cues when an 8 EMA crosses up on a 21 EMA on the 15-minute time frame, right? Very basic. Hopefully that makes sense how we did that. Now, if we wanted to, we could go in, we could add more parameters. We could utilize different time frames. We could go crazy with this alert and make it very, very specific to whatever it is that we're looking for. But for the sake of this demo, I'm just going to do this very basic thing. And you guys, if you have questions about it or you want, further detail here, we can do that. We want to give this an alert, so we'll call it like 821 EMA cross. We want to choose how long this lives in our platform. Maybe, I don't know, whatever, however long you want. In this particular instance, I want this to be alerted every single time it happens, or, for a while. So I'm going to choose those max triggers. We can again choose whether we want this to fire during extended hours or not. I pretty much never utilize extended hours, so I'm going to keep that turned off. And I'm going to say create alert. And so now that alert again is living over here. And so every time over the next 20 instances of that 821 EMA on the 15-minute time frame, every time that thing crosses, I'm going to get an alert to let me know. That's going to close, or I'm going to get the alert on the 15-minute. So on the 15-minute candle that closes with that cross up, I will get an alert when that candle closes and they've crossed up. I can take that. So if I hover over the alert that I just made, you'll see those 4 icons. And if I go to edit here, what I could do with this now that I've created this script is I can save this as a script and I can utilize it everywhere else on the platform. So for example, in order to do this, I'm going to go to script actions. I'm going to say save as template. And I'm going to title this thing 821 EMA cross 15-minute and say save. So now it's listed over here. This is my script manager. So this is a list of all the different scripts that I can automatically pull up and utilize anywhere on the platform. And as you create new ones, they're going to appear over here. There's a bunch of saved ones that you can use, but then you can also create your own. So I've got this saved as 821 EMA cross on the 15-minute. Let's say, for example, that I'm looking for tickers that are meeting this criteria right now. Maybe the Qs aren't meeting it, but maybe there's another name out there that I'd be interested in trading. So I can go to the market scanner here, and you'll notice the scripting area in the market scanner looks very, very similar to the scripting area in your multi-factor alert. They're the exact same. So the same way that we went and we loaded up the script via that script actions button, we're going to, or the same way that we save that script via the script actions button, we can also load it as well. So we're going to say load from template. I'm going to search 821, and here's my 821 EMA cross on the 15-minute. I'm going to choose it. And so now this is loaded up as scanner conditions. Now I'm going to search the market for these conditions that I was looking to get alerted on the cues on. I'm going to go looking for other names that are meeting the criteria. First thing I got to do, I got to pick my scan through list. It's preset to the Dow Jones 30. You can search all kinds of different lists here. You know, the biggest ones would be things like the NASDAQ NMS. This has almost 3,600 symbols. You can type in NYSE. These composite lists are the ones that are the biggest ones, 1,900 symbols there. But you can search things, or you can search through, like, for example, top traded tickers. You know, these are top traded by retail investors. You can look at top mentioned on Wall Street bets, top positive mention, negative mention. You know, you can kind of really go crazy here with where you're scanning the market. For the sake of ease, I'm going to pick a smaller list. I'm just going to use the NASDAQ 100. Next, we need to choose whether we want to utilize that extended hours data. I never do, so I'm going to keep that turned off. But then we have this current candle toggle, and this is really important to understand if you're going to be utilizing the scanner. The current candle toggle, when it's toggled on, it's looking for these conditions being true on the current candle that's forming. If the current candle is toggled off, then it's looking for these conditions to have occurred on the most recently closed candle. So on the 15-minute time frame, you know, every 15 minutes you're getting a new candle, right? But if you're utilizing, let's say you're utilizing the daily time frame. If you have your current candle toggled on and you're utilizing a daily time frame, it's going to be looking for these conditions being true on today's daily candle. If you have it turned off, it's going to be looking for these conditions being true on the most recently closed daily candle, so yesterday's daily candle. So that's kind of the difference there. The idea being that on the current candle, these conditions could change, right? Maybe it's crossing up right now in the first 3 or 2 minutes of this 15-minute candle, but maybe by the time this candle closes, they're no longer crossed. However, if the current candle is unchecked, then it's looking for this to have occurred on the most recently closed candle, which means essentially the last 15-minute candle of yesterday's trading session, because we're only 3 minutes into the day today. So we know that these conditions are true. They actually occurred, but they occurred on the most recently closed candle. So that's the difference there. It's up to you what to choose. There isn't a right or a wrong way. And then we get our tickers that are meeting this criteria right now. And I could throw up these indicators just so we can see them. Changes to 8, changes to 21, say apply. And we could see, here's our cross having occurred because of this big gap up, right? And you're going to see it across the board. You have a big gap up, you got your cross. So here's all the names meeting this criteria. And, you know, interestingly enough, here's your gap up. Miss Michelle, you like these gap plays. So here's an interesting set of circumstances where you got a bunch of gap ups. And we could, of course, you know, we could scan for just the gap up. Doesn't have to include this cross. You could scan for the cross with the gap up, right? It's really up to you. But once, the whole point of this demonstration is just to show you, you know, once you have these conditions written, you can then use them anywhere else. For example, now you have all of these tickers that are meeting this criteria right now, right? So what I'm going to do is I'm going to save this. We're going to call it 821 EMA 15-minute cross up. And we're going to say save. So now I've saved this as a scan. If I go over to my shared scanners list, EMA 15-minute, here's the scan that I just made, right? So the next step here is maybe we want to see, you know, of the names that are meeting this criteria now, how do they tend to perform when this is true? This is taking it to the total next level. We can open up a scanner over here in our widgets. So if you go to your sidebar and you say add or remove, I'm just going to remove these guys just so that we can focus on one thing. And I'm going to go to watch list or scanner and say done. And then up here where it says Dow Jones 30, I'm going to search 821 EMA and I'm going to utilize this, where is 15-minute cross up. So notice how it's running the scan here and here. So now I can remove my scanner, and here are all the names that are meeting this criteria right now. Right now, maybe I want to take this and test all these names and see, well, when they have this 15-minute cross up, how do they tend to perform? So I'm going to go to the strategy tester now. When I open the strategy tester, I've got two sides. You notice, again, that scripting area looks the exact same as in the scanner, as in the multi-factor alerts that we were playing with earlier. It's the exact same. So the same way that we loaded up those conditions in the scanner, we can load them up here in the strategy tester. So maybe we want to utilize that 821 cross as our entry, right? We're buying on the cross up, and maybe we want to sell the cross down. So on the exit side, we need to define that cross down as our exit. So we're going to say add script, and we're going to type this out the same way that we did. So indicator exponential 8 crossed down on indicator exponential 21. So here's our entry. Here's our exit. We need to choose our time frame. We need to choose how far back we're testing. We just go 7,000 candles, and we're choosing a long strategy here. There's a long based strategy. We could very quickly get the returns of this strategy on every name that's meeting this criteria right now. Pretty freaking cool how this works. And I can also then pop through all of these individual names. And see how each one performs. You're going to get market data, or you're going to get tabular data back. And we could talk through this if you guys have questions about some of these data points and what they mean. There's lots of information here, so it's important to understand what all that information is telling us. But yeah, you can very quickly scan through all of these names, test them all, find out which one performs the best, and maybe that's the one you want to take the trade on, right? The one that does the best of the ones that are meeting your particular criteria right now. So that's really, that's like a very broad brush explanation of what TrendSpider is really all about. It's trying to allow you, the tool is meant to allow you to just really refine your strategies and find the best opportunities that are present in the market at any time, and allow you to, make an opportunity of them. Otherwise, you're kind of shooting blind, right? You're scanning and you see, okay, there's 10 names that meet this criteria, but maybe I don't know anything about how they perform when that criteria is met. Just kind of scanning through these, there aren't that many that do all that great on this particular setup. I'm trying to find one that actually has a decent return relative to its performance. Its asset performance. So there's problems on this one, but at least your performance is a little bit better than your asset here. The asset's lost about 8% over this 7,000 candle period. This is about a year of data on this name, whereas it's gained 2 1/3% the strategy. So if this strategy works better, ultimately this strategy works better than the buy and hold is essentially what that's saying. There are issues here in your tabular data. In your tabular data, this is just like a breakdown of all the different data of the strategy. So your net profit, your asset performance, your beta versus asset, your positions, your win rate, your loss rate, your reward to risk ratio, average return, average loss, average win. Sometimes you're going to see instances where some of these data points are highlighted in red. And what this is called NoGo shading. And our NoGo highlighting. Whenever you see this NoGo highlighting, it is good reason for pause. Like, you do not want to continue on with a strategy. You do not want to bring a strategy live if you have NoGo highlighting. Your goal when you're utilizing the strategy tester should be to remove all NoGo highlighting. And the reason why is NoGo highlighting is it's drawing attention to fundamental problems with your strategy's data. In this particular case, The issue is with your win rate. You have a 32% win rate. And when you hover over this no-go highlighting, you get this pop-up and it says with reward to risk ratio of 2.21, you need at least 37.15% of winners in order for this strategy to be viable. So essentially your risk reward, this value right here, 2.21, meaning you're risking $1 to make $2.21 essentially. That's what that's saying. So it's a little better than 1 for 1. So with that risk reward, you need a certain win percentage in order for that risk reward to make sense. If this risk reward were higher, if it were say 3 and your win rate was 32%, this would be okay. You wouldn't have no-go highlighting. But we've kind of determined that a 3 to 1 risk reward ratio, making risking 1 to make 3, is kind of the safest way to trade over the long term. Assuming that you are trading the same amounts every single time, you're risking the same amount. This is essentially keeping you from killing yourself in the markets and losing all of your money going bust. So you want to find ways to remove or to better your win rate. There's lots of different ways that you can do it, and this is where the art of kind of understanding how indicators work and just kind of playing around can impact your strategy. So let's try and make it better. One thing that comes to mind is, let's say we only want to buy this when, I don't know, RSI is at a certain level. We'll say indicator, we'll say RSI. Let's say it's greater than a constant value of 50. So we only want to go long this 821 cross up if we're in positive RSI territory. We can rerun this strategy, try it again, see if it impacts the results at all. Maybe it will, maybe it won't. Looks like it didn't all that much. Our performance increased just a small 0.5%. Our win rate went up 1%. Our risk reward went down just like a fractional amount, not very much. It didn't really help us. Now we could try different things. We could say maybe make this 70. Maybe we only want to do this if RSI is above 70. We're just trying to limit the amount of trades that we're taking. So now our performance has gone up to 6%. It was a 2% gain. Now it's at a 6% gain. However, our positions is problematic now. We've now removed 147 positions, right? We've only taken 3 now. And we believe that there is a sample size. Kevin Z, what's up? Is there something similar? What are you asking about there, sir? We believe that you need at least 50 positions to have any sort of good understanding of how a strategy works over time. So any position amount less than 50 is going to yield this no-go. That's kind of up to you. If you decide that you want to do something different there, you totally can. It's really up to you. But that's what we believe is 50. You need at least 50 trades to know if a strategy is viable over any period of time. So we might want to try something else. You might want to say something like price close greater than these moving averages, right? So we'll say exponential. We'll say it's greater than the 21. We know the 8's crossing up on the 21. We know price is above the 21. So we'll test that and see. Same kind of deal. We're not really there yet. I'll try the 8 here. Same deal. So maybe the trick is, maybe this is a time to go short. Price has been trading lower for some period of time. You got to try a lot of different things is the point that I'm trying to make here. And what you really want to do is you want to get, yeah, Kevin Z, I did not see your first message, sir. So type that again. The point is you want to get to a point where you're where you've removed all of the no-go highlighting. That is the goal, because that no-go highlighting ultimately in the long term is going to make your strategy not viable. Let's say something different here. Oops. Let's Let's not short this. Let's go long this. We're getting so close. So we've increased the performance. Our win rate still just isn't high enough for our risk reward, but we're getting better on that risk reward. See, we've increased it to 2.65. What we really need here, we really need it to be at what, 3. We need a win rate of 32.8 and we're at 30%. So maybe we want to change the length of this SMA. Make it a little bit tighter. What I've got here is just price close greater than a 100 SMA. So that increased it a little bit more. Our win rate's 32. Our risk rewards 2.55. Man, we are so close. We need 33. Let's try it over the 50. We're just trying to establish a basic trend here. Price above a longer term moving average. We're guesstimating a trend. Interesting, so that made it worse. That made it quite worse. So anyway, you get the idea here. The idea here is play around with your strategies and try and refine them to a point where you get better. You get good results. Over here, you get performance results that are favorable to you, and you have that that no-go highlighting. You don't have any no-go highlighting. Okay, feature requests. Can we somehow select custom dates and not number of candles for back testing? Test a strategy. Yeah, I hear you, buddy. Depending on the custom date selection rather than 7K. So that's a good question. I don't know if that's something that we will add. It is possible that we could add it to the platform as a functionality for you. What I would suggest doing is I would come in here, go to your name up at the top, and go to request a feature. And then fill out this field. Fill out all of this stuff and make your request. And then that will send over to the dev team. Have you tried doing that, Kevin? If you have not done that yet, I would do that. If you have done that, I'm happy to put in a request manually for you. That is a big ask. And it's not something that I would anticipate being added in short order. It is potential, like there is the potential for something like that to get added. I'm sure there's potential for anything to get added. But I can't speak to whether or not that's something that they would add soon. I got a few minutes left in my morning here with you guys. Does anybody have any other questions? Was anything about anything that I explained, did you guys have any trouble understanding any of that? Anything you need like a little bit of a refresher on or a little bit of a deeper dive into? Or did that kind of help gain some understanding on how to utilize the platform? Because I definitely want you guys to walk away feeling like you understand how to use things a little bit better. You feel more comfortable. The platform, there's a lot going on here. So I just want to make sure that you guys, you know, I want to make sure you guys utilize it to its full capability. Michelle, any questions? Sylvia, any questions? Roman, you've been here for a while. So my guess is that, Roman, you have a pretty decent understanding of all of the things that I just explained. Big gap ups on the indices. So here's kind of a bit of a broadening range. IWM big gap up. How the bank's looking today, big gap up on the regionals. Yeah, everything big gap up today. Interesting. XLF kind of filling the gap from yesterday. Yesterday's gap down. Any questions, guys? Nothing? Nothing from y'all? Nothing you're curious about? If not, then I'm going to jump on out of here. Kind of feels like there aren't any questions. And if not, that's totally fine. You can always reach out to us if you do have any questions. You can always reach out to us via this contact us button in the bottom right-hand corner of your charts. If you're not yet a TrendSpider user, but you have questions, oops. Down here in the bottom right-hand corner of the main page of the website, you can click on this. We do have live employees in chat every single day, Monday through Sunday, answering questions for you guys. Monday through Sunday, we've got folks in there 20 hours a day. So there's almost always, or rather Monday through Friday, 20 hours a day. Saturday, Sunday, usually it's about 8 hours a day. There's always someone around who can answer a question. Do not hesitate to reach out to us if you have any questions. We are here to assist you. Let me do this too for anybody who is not a TrendSpider user. If you are not yet, but you're interested in becoming one, here's a 35% discount for you. I just added it in the chat there. You're welcome to utilize that if you'd like. We do have 7-day free trials. So really you got nothing to lose in giving the platform a go. And yeah, I'm going to be live again doing this on Thursday, same place, same time. Tomorrow, I'm going to be live for the FOMC announcement. That's going to be a very important announcement, obviously. I will be live starting at 1:30 Eastern time. The announcement goes live at 2. We've got Jerome Powell at 2:30. I will be tuned in. He will be speaking to us here live on the broadcast. So if you're interested in watching and listening to what Jerome Powell has to say tomorrow, please join me. I will be live for that. Yeah, so that's it for me today, guys. I hope that this was informative. I hope that you guys all walked away learning something a little bit new on the platform. And again, like I said, feel free to reach out to our team anytime you have any questions. You can also reach out to me. My DMs are always open on Twitter. And my Twitter handle is right over here. It's at Krutzky Trades. Feel free to reach out to me anytime you have any questions. I'm happy to assist. If you need help with building a scanner or something like that, I'm your man. So yeah, have a great rest of your day, everybody. Trade them well and be safe out there. Remember, we got FOMC tomorrow. That is very likely going to be a volatile day in the markets. And we may not have much volatility today, but I guarantee you it's coming tomorrow. So have a great one. Thanks for being here, and we'll see you soon. Bye.